This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report podcast highlights for the week of August the 8th through the 12th, 2022. A week that we knew would be very interesting with all of the inflation data in the U.S. How would the bond markets react? How would the Forex markets react? And how would those in turn affect gold and silver? Well, coming out of last week, it looked like silver was going to be in trouble. And we finished last week, with a pretty lousy day on Friday, the day of the BLSBS. But we came in on Monday with a huge rally in silver, up 75 cents, setting the stage for what will be a very interesting week ahead. So one of the charts we reviewed on Monday the 8th was the daily chart of COMEX silver. Well, look at the daily chart of COMEX digital silver, closing above its 50-day moving average for the first time since April the 20th, when price was at $25.50, $5, 25% higher. April the 20th. God, that seems like a lifetime ago. But we're finally back above it. Again, no trend goes to zero, right? All trend lines are going to be broken up or down. And now we're starting to turn again. We're above 2050. Again, you can see that low in the middle of May. I guess it was middle of May, not middle of June. Okay, that was the one where everybody had their stops. See, we got up there 5 days ago, tapped and fell back to 1950 back on Friday. And now, bang. Oh, get me out, get me out. Above 21, there's probably going to be more stops to run. And at this point, again, unless we just completely reverse and fall back below the 50-day tomorrow, if we can hold above 2050, get above 21, there's no reason why we can't go to 22. And in short order, as those shorts get squeezed. While the COMEX metals continue to rebound from their July lows, and while ETFs like the GDXJ and the SILJ continue to recover as well, the big ETF, the GDX, Major Gold Miner ETF, is still struggling and trying just to get back to its 50-day moving average. Why is that? What seems to be the problem? Well, a major holdback is the fact that about 1/8 of the fund is invested into Newmont. And Newmont, as you might know, fell 50% from about middle of April to the middle of July. Since it has yet to recover, the GDX has yet to recover. But regardless, Tuesday seemed like a good day to check out that chart. And then finally, the GDX, the only one that hasn't gotten to its 50-day yet. And why? Well, because Newmont, the dog of dogs, it's down 50% in 90 days. Remember all that from 2 weeks ago? Newmont is the number one holding of the GDX, 12.2%, fully 1/8 of all the assets in the GDX portfolio are in Newmont. So that's why Newmont isn't doing jack. I mean, you could take a whole bunch of the other stocks. Maybe I'll put that link on here so you can look at the components of the GDX. Look at all the ones that have to move to, you could add up 50 of them that don't add up to 12%. Okay, so Newmont is critical to getting the GDX to go back up, obviously. Okay, and that's why it's not at its 50-day and why it is lagging silver so badly. So anyway, we'll watch. Again, can it hold 27 and make a move toward 28 and the 50-day? All of this hinges not so much on what the CPI says, okay? Though that'll be interesting. It hinges upon what happens to the dollar and actually, I should say the treasury market and by extension, the dollar, not the other way around, okay? Wednesday brought the latest update on price inflation in the U.S. Came in a little less than expected and at least stable month over month, in large part due to falling energy prices and some other commodities. That had a positive impact on the bond market, at least initially, and it drove the U.S. dollar downward. Of course, a falling dollar can be a tailwind for the precious metals. We got to watch it pretty closely, and that was one of the charts we discussed Wednesday the 10th. The dollar, we're going to start there. Because as we wrote this morning and as we've been talking about for a couple of weeks, the dollar finally broke down below and closed below its 50-day moving average for the first time since February the 23rd, about the time Russia invaded Ukraine. I think that was almost the exact day, 24th maybe, whatever. Anyway, it has been consistently closed above its 50-day every single day for 6 months until today. So we'll see what happens next. Now, when it first broke through the 20-day, remember we were talking about that in late July? It fell all the way to the 50 and then bounced and spent a couple days last week failing to get back above the 20-day. And that's why we said today was going to be such an important day for the dollar. And the dollar is going to be the most important thing to watch. So what's going to happen next? Dollar will probably try to get back above the 50-day some point tomorrow. And we'll see. Maybe it will. But then if it falls back below and then falls below 105, okay, that's what we're going to want to watch. Maybe we can finish the week not only below the 50-day, but below 105. Let's watch closely. As mentioned, energy price is a big part of the inflation story. When crude oil was $125 a barrel and gasoline was $5 a gallon, that was really when inflation was soaring in the U.S., but now they've both come down about 25%. So we watched crude oil pretty closely at TF Metals Report, and that was just one of the charts we discussed on Thursday the 11th as we got ready for the all-important weekly close coming up on Friday. If you want to watch copper tomorrow, that ought to be fun. You ought to watch crude too. Crude clearly in a downtrend that goes back, 2 months, right? You can see that little down channel that it's in, well below its own 50-day, trending lower. But remember this day about a week ago when it washed out down to 87? I remember saying, man, if it washes out to 85, that might be a dip to buy. Well, it never did wash out to 85, but that was a dip to buy. It's gone up 5 days in a row ever since and actually touched 95 today before settling at around 94. 95, obviously a very important level. You can see that here. It was resistance in February. It was support from March all the way through July. And now it's resistance again as confirmed by today. You want something to watch in crude tomorrow? Watch 95. Why is this important? Well, why was the PPI down today? Because energy prices, because of this chart. Look at that. All through July, crude went from 110 to 90, 95. Hell, go back into June, it was 120. So why are PPI coming down? Why is inflation coming down? All that kind of stuff. Mainly this. So you want this to turn? Yeah, sure you do. So let's just see. Let's see what happens. Let's see if crude can get back over 95 and close there tomorrow. And on Friday, August the 12th, we conclude the week with a nice, surprising rally. Silver had fallen on Thursday, even though the dollar was down. With the dollar going back up on Friday, silver reversed. Actually looking to close well above its 50-day moving average and very near its highs of the week if it can extend next week and get above 21, it's going to start looking more and more like the lows are in and that we are in the middle of what is a very nice bounce back rally. So again, we'll see more of what that looks like by next week. We got some data next week we're going to have to make our way through. We're going to have some Fed goons we got to make our way through. But the metals don't look too bad, especially now that they are so significantly off their lows of about a month ago. So come back next week and we will see what the week has in store for us. But for now, things are certainly looking better, really almost by the day. Have a great weekend, everyone, and thank you for listening to the TF Metals Report podcast highlights.